Hello, everyone. I'm Janine Donnelly, Manager of Webinars for Independent Banker Magazine. And on behalf of ICBA and Independent Banker Magazine, I'd like to welcome you to our presentation. We will be holding a Q&A session at the end of the webinar. You may ask a question at any time during the event by entering it into the Q&A panel. If you experience technical difficulties during the webinar, please use the Q&A panel to alert us, and someone will assist you. You may download a PDF version of the slide deck by clicking on the drop-down menu labeled Event Resources, and you'll find that on the left side of your screen. Know that you can download those right from the platform without being disconnected from the webinar. Today's webinar, Building Digital Banking Tools to Compete in a Post-COVID Challenger Bank World, is sponsored by Agora. Agora's product offerings enable financial institutions to accelerate their digital experience without replacing their core banking system. And now I'd like to turn the presentation over to your moderator for today's event, Scott Mills. Scott, you now have the floor.
All right, thank you. It's my pleasure to be with you. I appreciate the introduction, and I appreciate being a part of this session today. I was thinking about the introduction to the topic, and I'm really excited about not only the people that are on it, but some of the ideas and the research that we'll be sharing with you in just a few minutes. I wanted to share a personal story. About a week ago, I decided I wanted to put a little bit of money in a 2-year CD. And I went to 10 banks in my state, and I decided that I'd like to keep the money in my state if I could do that. So I went to 10 websites, and out of the 10, none of them had the rate on there. I'm like, all right, that's fine. So after filling out 8 web forms and sending 2 emails to the banks, a week goes by, and I'm still waiting to hear back from 7 other banks. So what I got out of it was, it wasn't a wonderful experience for me. I'm trying to do business with the bank, and it was difficult. And I'm sure if the banks knew that about my experience, they would want to have a better experience to share with me as well. So let me go into who's here with me today. Let me start with my friend Charles Potts. He's Chief Innovation Officer at ICBA, and he drives strategy for the association and how they develop impactful value-added solutions that help community banks meet their customers' evolving financial services needs. As a part of his responsibility, he runs the ICBA Accelerator program that's out of the Venture Center in Little Rock. That is a very cool program if you'd like to know more about that. Welcome, Charles. We also have Arcady Lapiro. He's the founder and CEO of Agora, which, as Janine shared with us, helps banks ramp up their digital experiences without having to replace cores. Agora provides and co-creates technology tools for banks so they can accelerate the digital journey and implement state-of-the-art fintech products or features. And relevant to this discussion, he also worked at a challenger bank, and he was part of the management team that grew it from 0 to $20 billion in assets. Next, we have David Reiling, who's the chairman and CEO of Sunrise Banks in St. Paul and Minneapolis. I read about the bank quite a bit, and they're recognized as an innovator and one that empowers the underserved and strives for financial inclusion for all. Sunrise has a long history of serving inner-city communities. And finally, Elias Ghanem, who is the Global Head of Market Intelligence for Financial Services at Capgemini. He is a senior executive with an entrepreneurial drive and a strong customer experience focus. He's got deep experiences in retail payments, e-payments, fintech, startup creations, and strategic partnerships. And in his role at Capgemini, he's helping to build engagement between clients and the fintech ecosystem. So with that as an introduction, we're going to jump into it. Charles, you're on deck. So we've seen examples of how banks are rolling out capabilities faster, such as we had to do with PPP programs in the last couple of months. but normally you wouldn't see this kind of movement so quickly. It would take a little longer, it'd be a little more maybe deliberate. It just generally takes a while for banks to roll out new capabilities and technology. So I would appreciate you helping us set the stage here and talk about how typically in a pre-COVID-19 environment, what does the bank digital roadmap look like? What would be in there, and what would we have expected to see just 6 months ago?
Yeah, well, thank you, Scott, and thank you, Agora, for sponsoring this today. And I appreciate our team at the Independent Banker for hosting this and giving us this opportunity to talk to the bankers today. I think it's an interesting question because it reminds me, and frankly, I've had one of the bankers that I know share with me this old quote that came from a World War I Prussian general that the best battle plans are thrown out the window as soon as you meet the enemy. And to some large extent, COVID became the enemy. The COVID crisis became the enemy of many of the plans banks had in place coming into the beginning of the year. And at Independent Banker, they published in the 1st of January their 2020 Community Bank CEO Outlook from the survey they did of our community bankers. And clearly, if you look at that survey, you can see that bankers were thinking about a little bit business as usual. At the top of the list was deposit growth. There was a keen interest on keeping up with their technology needs. And coming in third from a CEO's perspective was increasing loans. Well, clearly PPP helped increase loans for a lot of the banks. And as part of the crisis, as part of the PPP loan program out of the CARES Act, a lot of the digital channel renovation, expansion, utilization plans bankers had were clearly accelerated, and clearly that focus shifted greatly. And to some extent, it gave rise to a number of bankers that we've spoken to over the last couple of months, recognizing, reimagining the importance of the digital channels from an engagement perspective, as the examples that you've given there, Scott, and that typical roadmap, which would have been more small baby steps incrementalism, has been somewhat replaced with some massive leaps forward. I think probably though the unifying theme that we're gonna hear towards throughout this session today though is that engagement, the customer-facing tools, the content. Those that were top of mind for the bankers at the beginning of the year have become even more important to the bankers, and so that roadmap has been refined. It has clearly, had some re-examination, and it has brought to light the balancing now of deposit gathering tools and lending tools that need to be reimagined for a number of the banks.
All right, thank you, Charles. Very good. I am real pleased that LES has brought some research with him. I always love seeing research that's timely. And with that said, what has Gemini learned about consumer expectations for their banks over the last couple of months? And has that changed from what we saw in Q4?
Thanks, Scott, for that. And in fact, yes, what we've done here, what you are able to see on the screen is back in early April, we engaged with 11,000 consumers around the world, around all mature markets. And we asked them what has been the increase in frequency of usage before, during, and after the COVID. And what you could see here on the left, and we asked them across all the channels. What I will share with you is in a few slides, you will see the word behavior, and then we will see also the American consumer behavior to make a comparison. And what can we see here? We can see that they have across all the channels, branch, ATM, mobile app, company website, call center, social media, and chatbot. So if I were to start giving the first point of view is, let's look at branch and chatbot. Branch before COVID was 22% was where consumers were using it. Logically, during COVID, it is down as we speak, and it will bump back. It will come back to exactly where it was before, which is there are some people who would always go to the branch and will continue going to the branch. But I'd like to bring your attention to the chatbot. Chatbot at a global basis has a very limited acceptance. But you could see that by the end of the COVID, when we asked the consumers, again, 11,000 consumers, we asked them which frequency would you be using more and more, chatbot is as high as branches. So the adoption is happening on this aspect. But what are the big winners of the COVID? And COVID has only been an accelerator of something that was already happening. Let's look at the mobile app and the company website. Look, it's a straightforward jump going from 47 to 55 or 49 to 57. By all means, a mobile app and company website on a global basis are the winners of this situation of COVID. If we look now, if we do a zoom on the US consumers, well, there is not much big difference. Though the adoption of branch is going down, a little bit down, and the chatbot is going up a bit higher than in the rest of the world. But the most interesting part is, again, the mobile app and the company website that is becoming a relevant thing. So what is the key message that we are seeing here is there is more and more adoption of the digital channels as the way to interact with the consumers. But also, what did we see during the study? We also seen that the consumer behavior is significantly changing. And what Charles said as a consumer applies to everybody. The customer behavior is really evolving fast. And what we have been observing is the traditional players are really slow to react to the digital needs. And COVID is only an accelerator, like the uncertain times that you are seeing now will increase the need for digital. If we look before the COVID, only one of two customers said that their primary bank are well connected to other platforms. So banks are not very happy with their traditional banks. But even if we look a little bit more in terms of the behavior of the consumer before COVID, only 49% of the customers were using internet banking, 47% are using mobile apps, and only 15% are interacting with chatbot. Let's look at after COVID, how all these numbers are going up. 57% would prefer internet, 55% would prefer mobile app, and 21% will move to use chatbot. And for me, the most alerting part is what we could see at the right side of the screen, where up to 30% of the customers are willing to shift to any big tech being Apple, Google, Facebook, Amazon, or any fintech, a large player that is offering a full digital experience because of the unsatisfactory experience with their primary bank. And the primary bank are all of our traditional banks that are suffering from the situation. So what I could say really is the COVID has not shown anything new. It has accelerated a trend that was happening, but it's more than urgent for the banks to step in and make it happen. Back to you.
All right. Well, I'm going to ask you a follow-up question. Let me, 57% on internet and 55% on mobile. I know I'm a focus group of one, but why isn't that closer to 100?
Interesting. Because they are saying that they are using several channels, right? they are saying that more and more adoption is coming. And what I would like to see here is to notice the progression. This is only a few months, right? Before COVID, after COVID is the last 3 to 4 months. So if only in a few months we've earned so many points, imagine the trend. People are adopting it. And we will see later on that the adoption is not a question of age. The adoption of digital channels is across all ages. Of course, the younger you are, the more proactive toward digital channel you will be. So to answer your question, it's more a matter of age, of progressive adoption than anything else.
Yeah, okay, that's a very good point, because it's probably not going to stop at 57, is it? It's probably going to keep going up.
Oh yeah.
All right. Well, let's hear from the CEO banker on the panel. We've got David from Sunrise. Welcome. And from the title of the slide, we've referenced challenger banks, but we may all have a different idea of what a challenger bank is. But competition isn't just coming from other banks across the street or across town or credit unions. Would you give us your definition of challenger banks and give us some ideas about the kinds of features that they're offering to try to take business away from banks?
Will do, and thank you, Scott, and thanks, Agora, for your sponsorship today. It's delightful to be with everyone while it be virtual. I have to start by just kind of referencing back to Charles' first slide and his quote. Not that we need a quote competition, but when I look at that slide in the digital kind of transformation of banks and their slowness or their lack of moving forward, I think of Nero fiddled while Rome burned. And so there's my quote competition back to you, Charles. I was recently reading a survey from Cornerstone Advisors that stated that 20% of bank executives think their online banks or their digital banks were a significant threat. Now, being in the fintech and digital space, I look at that particular graphic that was up there, and I think I can click on it right here. And when I see that wrecking ball, I visualize that as a missile coming at community banks. And so that is the speed in which challenger banks and fintechs are developing products and services that we see in the industry. It is really at an incredible pace. And so if I kind of go back to the question here as to, what is a challenger bank? And I think the definition I have up here on the screen seems a little bit more to me like it is it's a European type of definition as a challenger bank. EU or UK, I'd put it in those. While the principles are the same in terms of challenger bank, and maybe the word we use in the US is more fintech, and there's obviously many definitions of that. I think some of the big differences that you'll find is in the US, as opposed to in the UK or EU, the challenger banks need a partner bank to work with, or they need to get licensed in all 50 states to do some type of activity, which is generally pretty cumbersome, and they choose to partner with some bank. Now, we have seen, obviously, the move forward, I think, with Varo being the first kind of fintech to come out and get a banking charter or provisional banking license in which to do business. And so what we're really talking about, I think, in the difference between challenger banks is these are technology companies. These are digital companies first and foremost that they happen to offer financial products and services. And so they are technology first that offers financial products and services. They've created a digital platform in order to provide these products and services. And to my community banker colleagues, I think that the difference out there is when we think of a platform, we may think of kind of our core providers, and you can pick any one of the brand names that we all know and love. This is not the case. These two might look and seem like they're cousins, but they're not. In the challenger bank or in that fintech role, that challenger bank is not a vendor. They own the customer. The bank is really a vendor to that fintech or that challenger bank, and that is a big difference. In addition to that, you see these challenger banks design products, not just design new, accessible, and innovative products, but get them all the way through that development process in like 90 days or less. The speed in which they can go from idea to actual testing in the marketplace is phenomenal. And then behind that, again, since they're digitally driven, it's data that is driving some of the, I'll call, check and adjust features. When they see that something that works, they can improve upon it. They see something that doesn't, they can delete it. Just to give you an idea, in that same Cornerstone survey that I was referencing, they found that just over 14 million Americans, or 6% of U.S. adults with a checking account, now consider a digital bank or a challenger bank to be their primary bank. And so to kind of give you an example, so Chime kind of leads that fintech challenger bank pack with roughly about 4.3 million consumers calling it their primary bank, followed by a fintech called Dave, no relation to me, unfortunately, with just shy of about 3 million primary bank customers. And so some of those maybe notable features between a Chime and a Dave is, so a Chime will offer some early access to wages as they're hitting the account. They'll offer an overdraft protection up to $100 for free. Dave's account opening, their claim is it's a 2-minute account opening process. So think of like doing a checkout on an Amazon purchase. Those are some of those differentiating models. And so where Scott was talking about his lack of kind of engagement or experience with a bank where he's at, or several banks, think of a 2-minute account opening process. That's pretty amazing. I know at Sunrise, our online process is not a 2-minute process, unfortunately. And I think one of the things, again, for the community bankers on the line, really to take heart in, while we all like to pile on the big banks and that they don't provide the relationship and the service and so forth, the reality of the data is that digital banks are really getting huge customer gains. And this is in the first half of 2020. So this is kind of pre-COVID and during COVID, if you will, predominantly at the expense of community banks and credit unions. And so these are a real kind of threat to the community bank model. And so, and as was mentioned earlier, it's not surprising that a lot of these digital customers that they consider this their primary checking account, they're younger, and their balances may not be as significant, but obviously it's a big demographic moving up. And so I think the real kind of key takeaways here is that COVID is pushing banks to accelerate their digital transformation, but there's the blessing and the curse in that. Our consumers and our customers are learning that they really don't need a bank branch in which to do business anymore, and banks have some shortcomings when it comes to their digital or their user experience. We're finding that those challenger banks they're faster, they're more accessible, and then for the most part, their primary model at the moment is free. And so at some point in time, they'll have to reconcile with the profitability of all this. But compared to where we are, community banks versus challenger banks, those are the struggles of today and the differences. So Scott, I'll pass it back to you.
I really appreciate that explanation and that insight from you as a banker. It reminds me of that saying about free. Well, we lose a little bit of money on every customer, but we'll make it up in volume. Let me ask you a question. It's a personal question, maybe a little off script here a bit, but would you tell me how technical, or do you get into these discussions with your board? And if so, how many of your board members consider themselves kind of aware of what's possible with technology?
Yeah, so two things on that, Scott. It's a great question, and that is, first of all, in the composition of my board, I own the majority of the bank, so I have a little liberty in terms of who might be on the board and who might not. But the people that I look for to fill those seats is of a diverse mindset, for one, but number two is really along the lines of being specialists in whatever field. And so while I have a couple of board members who I would consider more tech savvy, if you will, to engage in this, we continue to educate our board members as to what's possible. And if you have the opportunity, one thing that I found has been uniquely important in that training is to take your board members to like a Money 2020 conference or a FinTech or a Lendit, just to let them interact and see the universe that's out there, because it is very eye-opening compared to what they were used to. And so, yeah, it's a struggle to keep up. I do recommend that you have a few technologists or people that really understand that FinTech business on the board. It makes a big difference, particularly those that can put it into English, if you will.
Very good. Thank you for entertaining me on that question. Arcady, I know that you're a real student of the Challenger Bank experience in markets both in Europe and the U.S. So my question to get you started today is are they having an impact yet? And if so, what is it?
Thanks, Scott. Great question. Just a second to say thank you for Charles to be here, David and Elias. Great to have you here, guys. So, Scott, it's a very good question. The key word is yet. So if we're here today at this webinar, it's because this topic is of interest. So what's the present growth of this challenger bank on the U.S. market? So first of all, who are we talking about? So it's all, like Charles mentioned, first word of a Prussian, you need to mention your enemy in a certain way. So who are this enemy? So this is a graph of April. This is monthly active users. So Chime holds most of the market. I'm sure all of you heard about Chime. A player that is growing, which started from the child, and that's a very important thing. They started with a child account and now they're expanding to a full account. It's Current. The small player, you can think they're small, but they're very important in the future. Monzo, Revolut, N26, they're all coming from Europe. Okay, so they're from Europe. They're small so far here in the US, but in Europe, they're large. In 3 years, Monzo today is 4 million end users in the UK. UK, something around 65 million inhabitants. Revolut, as of today, 13 million, and by the end of the year, 16. N26, 6 today, end of the year, 7.5. So now, let's focus, and I'm going to recoup with what David just said. Let's recoup on Monzo. Chime. Chime, as of today, 8 million basic customers. Let's call them users. Because at the end of the day, there's all of them are free accounts. So you can be a user, but you have to be active. So this is a data that David just mentioned. So the number of US consumers that consider digital bank as their primary market, because that's a risk for a traditional bank incumbents. Total end users, consumer today, 14 million, that represent, as of today, 6% of the US adults. So far, it's just 6%. But one key number to have in mind, between January of this year to this day, it's a jump of 67%. 67% number. So as of today, yet, we're talking about yet, how do they compare versus incumbents? This is incumbents, the big one. We're talking about the big one. The big one which are spending a bunch of money, a bunch of dollars. Just to give you an example, Chase is spending each year $3 billion of research and development in IT, when you take Fiserv, FIS, and Jack Henry combined, it will be less than that. And Wells Fargo and Bank of America are spending the same amount of money. So yet, if you compare this fintech, as David mentioned them, to the big one are taking the lead. The one who are taking a big hit today are credit union and community bank. To make a focus and emphasis on how do this challenger bank compare to all the banks, what you can see, only one is making in the top list, and it's Chime. So that's the situation today. So as of today, it's yet. They're not taking over the market. In Europe, they're doing it. So the US should follow the same trend.
Very good. I appreciate the market feedback. Let's take a couple of minutes, and I'm going to go ahead and forward through here. I'm going to ask David to talk about technology priorities for community banks, what he's seeing, and I'm going to ask Arcady to do a counterpoint and talk a little bit about what he's seeing on the challenger bank side in terms of what their focus is on these. All right, David?
Thank you, Scott. So what I see in regards to the community bank side versus kind of the challenger, on the community bank side, I really see the focus in really three main areas. The first being really in digital access. And I think COVID was a great example of this, and PPP was a great accelerator of it. So whether it's online account opening or a loan application process, if you just think of PPP, I must have received several dozen emails from different vendors and calls from them saying, hey, we have a solution for you to spin up to do a PPP application. And so that type of application process, digitally kind of baked into a workflow, was very readily available, and I think several, if not a lot of banks took advantage of that. So I think there's a tremendous access, and I think online account opening obviously has been in the mix, and that only accelerated kind of during the COVID area and what we've seen in the last 6 months. In addition to that, I think some of the things that were learned, just given the compression of like a PPP scenario, is how quickly you could spin something up or partner with a vendor. And so it really, I think, put a different mindset as to what might be possible in terms of digital access for customers, whether it be account opening or loan and so forth. Second, I see quite a bit of work being done around process automation. And so that could be taking a backroom process that's, let's say, a checklist type of a process today and digitizing it. How do you put in some robotic or automation in that space so there's a person who may need to oversee it and take care of anomalies, but the automation kind of happens unto itself. And so, again, in that backroom type of process automation, we see both the moving of data and the moving of money as a part of those components as well. Again, with oversight at the moment, but it's really how do we get some efficiencies out of our current processing and systems and kind of replace people with digital and paper with digital when we think of the automation processes. Lastly, I see quite a bit of leaning on a lot of different industries, but particularly, I would say in the community banking space, on taking your digital forms and or taking your paper forms and making them digital. So that it's either in the function of a secure email and an attachment, a solution like a DocuSign, which can almost be used for anything that you need to get signed today. As a matter of fact, I had my first experience doing a digital or a Zoom notary with a law firm who now specializes in digital notarization. And so a kind of a bold new world in terms of changing out paper for digital and people for digital in that space, in the focus, I think, of making things more accessible and easy online, convenient, as well as making things probably process-driven and digitized at the end of the day. Even if some of this is kind of taking a piece of paper and digitizing it, I think the next side is really putting it into a digital form so that people to capture that data and use it later on. And so I'll pass it over to Arkady to talk about the challenger bank side.
Yep. Thank you, David. The first 3 points from the community banks that David mentioned, obviously, challenger banks are not focusing on because they were already doing that. The last point, I'm not going to be cynical because I was one of them 20 years ago, built from scratch to over $20 billion. They're not focusing also on equality and financial inclusion for all. Certain will say yes with underbanked population, but the reality is kind of different because it's not the same kind of service. So what challenger banks are focusing now after COVID, I'm not going to say now 6 months ago because things have changed drastically for challenger bank. One may think that because of COVID, there was a huge switch to challenger bank. It's happening, indeed. But the economic for challenger bank was hardly hit with this crisis. So right now, they're focusing on funding, cross-selling, and monetization of their clients. So right now, the focus is to find a niche market. It can be underbanked. It can be the gig economy, freelancers, small business. There was a recent report from Cornerstone Advisors which put a number of it. It's a market of $370 billion. So most of the challenger banks are rushing into it. So Revolut, Monzo, N26, the European one, and in the US you have Oslo, Just, Lily, and many others, they're all rushing after it. Another thing we're focusing on is saving and financial wellness. Basically, to raise money on savings, high yield, and to do cross-selling of products. The last thing, which is much more advanced in Europe than in the US, but it's happening right now in the US, it's open banking and access to data. So not related to Challenger Bank, I'm sure you've all seen recent investment from MasterCard and Visa in open banking and data. So there will be a big focus on Challenger Bank because they have end users, they have data, and they will find a way to monetize it versus community banks.
Okay, very good. Well, it sounds like we should probably open up a couple of accounts just so that we can experience these kinds of things for ourselves. Charles, you kicked it off for us, kind of talking about what the approach to digital transformation was prior to the pandemic. And in your role, you're kind of like you are an advocate for innovation for community banks. So if you were able to sit in the boardrooms of the banks, what would your advice be about how they should approach that roadmap for the coming year?
Oh, well, Scott, given David's earlier challenge, I would first quote the sage advice of one of the greatest business minds, Yogi Berra, and that is, if you don't know where you're going, you might not get there. This is the real challenge that I think a lot of community banks are going to face, as now they're reimagining the possibilities, the endless possibilities that come from, frankly, experiences they've just learned coming out of PPP lending, looking at a lot of these, clearly newly focused digitization and optimization requirements and opportunities, and it really challenges a lot of community banks to step back a second and focus on end results. Right? Where is it you want to end up? Where is it you want to be? And to a large extent, this is, and it's obviously a hot, trendy term that some of us industrial engineers really like, that's being used right now. But it really is about imagining the supply chain, the bank process. And so you look at how to optimize these tools, these capabilities, this experience you want your customers to have, the products and services that you offer, and you have to paint a picture of this end-to-end supply chain you want to make sure gets built, gets renovated, gets improved, and gets optimized. And part of that is tremendously empowered nowadays by a lot of the technology and a lot of the solutions that have put in place the ability to, and David described it, really take an end-to-end transaction without the community banks now having to cobble together a variety of solutions and partners and vendors. That we can now have a more seamless end-to-end approach that brings not only a better user experience, but more efficiencies into the bank's operations. So this understanding where you want to be, this roadmap truly of where you want to go, helps the community banks first and foremost find those places that they can focus on optimization. It also requires, as we've kind of noted on this slide, there's an opportunity for collaboration. So there's a build, buy, and partner opportunity there that comes from this exercise. And part of where we are helping community banks is bring to them, like Agora and others, potential partners that can help them get through this journey and provide these capabilities. our accelerator program highlights and promotes a number of startups and early stage companies that community banks now find they've got a bigger toolkit, if you will, a bigger roster of players that they can work with who understand community banking and can help build out these solutions and these capabilities. So this reimagining the supply chain, this reimagining where you want to be, looking at the friction points, looking at the hurdles that can be replaced and optimized from both the front end to the back end, and then making sure you got the right products and services there. All of those become very important exercises, and I would say one of the other things too that we've been informing community bankers throughout this process is don't lose sight of the lessons learned through the COVID crisis and PPP. A lot of the things that the bankers had to embrace and do really, under massive pressure and time crunches, as soon as they can kind of come up for air, take a step back and look at it, a lot of them are finding, wow, there's some really neat stuff that we did that we can apply more broadly, across our bank ecosystem. I had one community banker share with me that, one of their senior lenders walked into a meeting not too long ago with this tablet application that they used to facilitate the PPP loan process, and ask her, are we going to be able to continue doing this for the other lending activities we have? And that is a great awakening when the employees themselves look at what they did and said, how can we repurpose these capabilities? So this challenge, this evolution to find end-to-end seamless solutions and seamless services with the right products and services in a just-in-time fashion, I think is going to be critical to accelerating a lot of this digitization for our community banks.
Very good. I could spend a lot longer talking to you about that subject, but in order to get everything in our session that we want to do, I'm going to press on. But you suggested something I think is a quality of vendors that we haven't been talking about generally, and that's speed. That speed is really important these days. And if a vendor says, hey, it's going to take me about 9 months to be able to do that for you, well, you might ought to be looking at some different vendors. So, David, I'm going to ask you quickly, you've already touched on some of these things that you think community banks ought to be looking at, but anything else from this particular slide you'd like to comment on?
Yeah, I think from the standpoint of when we think about where the priorities lie today, and I think you can spend a lot of time thinking about products and features. Where I'd really kind of direct maybe my community bank colleagues again is down the capabilities route. I kind of fall strongly on that side of develop the capabilities that are going to take you to the next level and look for kind of those partners. I think Charles hit on it in terms of you don't have to do this alone. As a matter of fact, you probably can't or shouldn't in terms of the technology that's necessary. I know at Sunrise, we partner, we collaborate to develop some of those digital capabilities. I might start out and pick up the phone and call Arcadia at Agora and say, do you know anybody who does this, this, and that? Or do you guys offer this? And how can we collaborate? Or maybe circle back to Charles and say, what's going on in the incubator? Is there any technology around these spaces? And so I think really thinking from a community bank mindset of, and every community bank has their unique capability or capacity. It's what you bring to the table. And so the question is how can you leverage that and scale it in order to grow your institution safely and soundly? And so I think collaborating with other fintechs and financial technology providers or even a challenger bank can put you in that space. I can tell you one example of Sunrise, who we're working directly with fintechs, and we know compliance really well, and we have systems and oversight to handle it, and we can handle it at scale. And that's a very comfortable yet nerdy thing that we do, but very important in the process of, financial services, obviously, and the products in the regulated environment we live in. But we only have limited balance sheet and capacity for the excess loans and deposits that get generated through these. So we need to partner with other banks and other institutions in which to manage our own balance sheet. And so there's generally collaboration in one way, shape, or form in each kind of fintech partnership we look at. And so, I think, again, the one takeaway in this whole thing, again, I'm going to go back. I know this was a book title, I think. I was trying to figure out a quote, Charles, to come back at you. It's not the big that eat the slow, it's not the big that eat the small, but the fast that eat the slow. I would just say, and I get backed up by Beth Knickerbocker, who runs the innovation office at the OCC. I see her periodically, and I always touch base with her, and I'm like, is the pace of change as fast as I think it is, or am I crazy? And she goes, yeah, it's as faster than it was the last time that we met. So if you're thinking you're feeling a little bit like Blockbuster in a Netflix world, it's about right. That's the speed in which I think the industry is changing. And so I think I would go towards develop your capabilities inside on action versus inaction.
Very good. Thank you, David. All right, Arcady, you had talked a little bit about some of the particular challenger banks. Would you talk a little bit about segmentation and how they're trying to attack community banks by going after specific audiences?
Thank you. So there are hundreds of segments, but I will focus on one. First one is the children. There's a lot of buzz, actually. You may have heard about Greenlight. They just reached an amazing milestone of 1 million end users, direct clients. Go Henry, it's the equivalent in UK. They're launching right now in the US. Venmo, 2 months ago, announced it. Wingo Card, it's a Canadian one, and it's not a challenger bank, but there are some rumors that Chase should launch something next year, and Chase is a recent investor in Greenlight. Another segment, we talked about it earlier, the gig and small business. It's this segment that should be a huge focus today. Few providers, Aslo, Juice, Revolut, and 26. And more or less, regarding Greenlight, children and the gig economy, they're all kind of similar. It's like on the children's side, it's like an app for the parent, an app for the child, a debit card, a plastic one, chose, allowance. It's very straightforward, very standard. On the gig side, there's some differences, but most of them, they do pay bills, integration to accounting tools, pay earlier, this kind of thing. The third segment, which is, I believe, it's not spoken out a lot, but it's a huge play on the long term, because that's really where the money is on the FX side. So you have a TransferWise, which has a B2B and a B2C side, Revolut and 26. So they're doing that in the US. There's one player, banks, maybe they didn't hear about them because they're under the radar, they're on the back. They're only playing B2B. They provide their plumbing, and they're great. It's Currency Cloud. So I'm sure in the next 6 months to 1 year, there's going to be a lot of move with community banks and credit union with this player. And there's a last one, which is the wealthy. There's one question. We're supposed to talk about the questions at the end, but there's one question from an attendee, which is a very good one, and special smile to him. Is one of the biggest card issuer and processor in this country. So his question is like, how this challenger bank are making money, because it's prepaid. They don't sell additional products. Is it going to limit the business? Indeed, all these challenger banks, very restricted in their business. So they all rely more or less, as David mentioned, on the sponsor bank on one side. They're not regulated. The product is very limited. So on the short term, there's a big risk. So that's why they try to diversify. But it's complicated to diversify because they don't have a balance sheet. But something we'll talk in a few minutes. What's very good data from Cornerstone Advisors among digital bank, mega bank, regional bank, credit union, and community bank. What's the age composition of their clients? And if you take a look at community bank, just 31% of their clients are below 40 years old. So, and the client of today, the client of tomorrow, they're here. They're below 40 years old. So that's a key data.
All right, thank you very much. We're going to dive a little deeper on the age question and attitudes towards changing banks. And I'm of the opinion you're going to see more people changing banks more frequently than we have in the past. One, because it'll be easier. But this bit of research that LES is going to share with us, I think, is particularly important because over the next 10, 15 years, we're going to have a lot of money being transferred from a wealthy generation to the next. So, LES, what have you got for us?
So I think it's great to come to this slide after having talked about David, who takes his board members to meet fintech, and Charles that create acceleration. And Arkady showing before that, I love the slide before about the age of the population. So what we did during our study is we asked the consumers, again, around the world, about if during COVID, they have discovered a new banking provider who best help them in the current environment and will continue using them after the end of the current crisis. And that's for us is a way of seeing retention, adoption, loyalty, and so on. And if you look at the bottom, we looked at it from all markets. So what I'm sharing with you today is the global data, the aggregated data of 11 markets, but we're comparing it to France, Germany, Spain, UK, and US. And this mix is because a lot of, as Arkady said earlier on, a lot of the challenger banks are coming from Europe and have landed in the US. If you recall, we N26 and Revolut landed last year, and everybody was like, why would they ever come to the US? And Arkady showed that they are already creating an impact with such a little track record yet. Now, if we look at the data here, what are we seeing? That in all cases, people have tried a new solution. Consumers have, during the COVID, were not happy with their current provider, the traditional bank that was providing the service, and went outside to look at. And if we do a deep dive into the younger population, the one that will be wealthy and engaging tomorrow, the one that are buying a house, financing studies, having kids, rather than the one that are 61 and above, who are beyond house, mortgage, or car. Well, look at them. Look at them across all markets, how the percentage of them that have tried a new provider. 42% of the 18 to 24 in the US have tried that. 48%, 1 out of 2 of the people that are between 25 and 35 have tried another solution and will continue using it. This is in comparison to France, Germany, Spain, UK, this is the highest level. So there is really a serious threat for the traditional banks to start losing the customers. And especially if you have older population, well, either these guys will die or these guys will be less and less active. So you should be looking at the younger population. But the younger population is not looking at traditional banks as their next provider. They are much more looking to the new players. And this is the biggest challenge that we are seeing. So earlier on, Scott, you were asking what should be done. And in fact, what came to my mind is move away from the concept of open innovation, where we create POCs, where we create proof of concept, where we test things, and move into applied innovation. Make it at scale, make it for all the customer, and make it as much digital as possible. That's what we call at Capgemini, move away from the open banking that is just arriving into an open X for experience, where you offer the best experience to the customer, so he remains with you active.
Very nice commentary. I appreciate that. All right. We are coming up. We've got about 5 minutes left, and I wanted to give Arkady just a couple of minutes to talk about some things that he's been working on, and he may even have a little news for us. Arkady?
Thank you, guys. And thank you, Eyal, for your data and your input, because it's exactly where we're going to at Agora. So, as Charles mentioned, we're part of the ICBA FinTech Accelerator. So thanks for Charles for everything that they brought, for the Venture Center brought us to us. So we dive into the data, into where the market is going. And as mentioned earlier, the big risk for, let's call it small bank versus the big players and the digital players, it's how can they reach out to the new clients, the teens on one side, and how can they reach out to where you can make money, and that's the bread and butter, which is the freelancers. So there's a way to do it. There's two ways. You build from scratch, you call your existing core provider, you're down for 1 year, not sure they will provide the solution you need to compete with Challenger Bank, because the enemy today is the Challenger Bank. So we're coming with a great product right now, which is we bring a Challenger Bank at reach of community bank and credit union. What do we do? What does it mean? We have created a full Challenger Bank for teens and for gigs, from the app to all the functionalities. For that, we're going to partner with a BIN sponsor like them, and we're going to offer this product, complete product, which can be deployed without any core integration within a month to any financial institution. They can have the best of the world. They keep their client, they deploy with the new technology and with the best-in-class features. An account for the teens, account controlled by two parents, all the card controls, virtual card for the child, everything in real time. They can send real time money to the child. The child can have an Apple or Google Pay, can have access to all the ATM. He can have access to space or saving, like for chores, allowance, and he can have money pool. Basically, it's kind of an account where he can bring money from his friends for excursion or trips or everything like that. So that's for the teen, with a great BIN sponsor to be announced in the next few weeks, and it can be deployed easily with the best-in-class user experience. We're also going to launch a gig/freelancer account. Same thing, user experience, top of the class. They can have access to cards for the employees, same functionalities as the child, but much more. They will have unlimited cards for employees, X account for employees, create pocket for taxes, and automatic categorization. And very soon, a few months after the launch, much more product. Accounting tools, pay bill, access to retirement product for 401k, mobile point of sales, credit line, and OCR matching receipt. So this is a great product that we're launching. Finastra, one of the key core, is going to offer to their client our children account, and we're very excited by that to serve the community banks.
Very good. Well, appreciate you sharing some news with us. I want to let everybody know that these links are live if you'd like to click on those and see more about our presenter companies. I'd like to thank the panel of Charles, Arkady, David, and Elias, and also thank Agora for sponsoring this session. And Janine, you want to take it home for us?
Thank you, Scott. I just want to let everybody know to watch for a follow-up email. We'll be sending out the next day, and it will contain a link to the recording of today's webinar. From there, if you haven't already downloaded a version of the PDF version of the slide deck, you can also do that from the link that we'll be sending to the on-demand webinar, because I know you'll want those slides. That concludes our webinar. Thanks again for joining us. Above all, stay safe and have a great day.